Welcome to another podcast from Traders Community, brought to you by traderscommunity.com, where we build a community for traders. Welcome punters, dribblers, investors, and traders. Remember, this is not financial advice. This is just a couple of traders sharing what they've seen, what they expect, what's going on, what's moving markets, and hopefully that helps you. So I have the glorious Madavi here and a piping hot Meta Johnny. He's had a very, very busy day today. And another big day for the market. We have the market's been pumping iron, just like Lois said live on screen. 4 days up in the stock market. A huge rebound on oil and natural gas after the EIA storage reports. We'll talk about that. Gold even stopped falling today. So that was coming off its biggest fall in a long, long time. We saw a bounce in copper. What's interesting with all this going on was the 2 and 10s in the Treasuries are still pointing negative, right? So we talked about that before. And this is all ahead. A lot of this is clearly stock market. Firstly, let's back a bit. Stock market fresh buying. Sorry, I got interrupted there by a message. Stock market buying after the July 4th, as expected, and then a lot of short covering. Remember, there was a lot of optionality. The VIX is still high going in tomorrow's NFP report. So without further ado, let's look at the charts and what's going on. So we can see, as I said, we've just been rallying. Now, the big thing is energy market. So oil had a 95 handle on it yesterday. It's now got a 102, got up over 104 today, WTI. A huge move and significant if you remember what it was holding. And we'll look at that when we get to it. Natural gas had a powerful rebound from under 550 to 620. And significant thing is here, remember this is domestic. And Freeport is still offline. We did have a much smaller build after last week, a much bigger build. So basically it balanced it out. Nasdaq 12,090, so it's over 12,000. S&P is just under 3,900 at 38.96. The Russell's at 1765. Vol came off, but it's still elevated, 26. So let's look at the. You know what? Let's do something different. Let's start off with Madavi on the Nasdaq, because the Nasdaq closed right here. Look what it closed at. So big level right at its 50, and it actually stronger than the S&P. It's closed over its Cajun and Tankin. So if you want to go ahead, Madavi, let me bring you up. What do you want, a 5-minute chart?
Yeah, whatever.
There you go. So pretty well up all day, and you know what? Let me go to 30-minute. So you can see this move that started 3 days ago on the 5th. So we've all, but actually you'd argue the bottom was on the just before the holiday there on the 1st. So anyway, we've just rallied up strongly. If you want to go through it with me.
Yeah. So this is the chart that I thought yesterday was going to like, but so the last 2 days I've been trying to hold the market, mostly haven't gone short a lot, and trying to stay on the long side of things. And so yesterday I thought we were going to rally like today, and everything was going well until we hit the 30-minute mark. And
30 minutes this morning or afternoon?
So I was a day early. So today I stayed with it, basically just rode the thing along all day. Trades, maybe a couple here and there, and it's a pretty straightforward day when it comes to the and most of these things. It was just like a buying frenzy, which tells me maybe we're getting closer to the top than the bottom.
Yeah, so, and you'll see when we look at the daily, weekly charts, very significant where it closed. So they're all at major levels. So, and it can be hard to hold it, given there's news bombs and all that. But when you see, the main reason we do that weekly strategy is we have a strategy at the start of the week we expected short covering. You had the minutes, and then you had the, what do you call it? The Fed jobs numbers tomorrow. Energy was a little bit weird on stocks because they get overdone, and so energy stocks we started buying back from the shorts last few days are actually down a little bit. Today we got well paid on all that. Like some of them are up monster. So don't forget, these companies are still making a buttload, and you'll see when the oil majors report in a couple of weeks, Exxon, Chevron, Conoco, Boku money right there. And you'll be shocked, I think, by the size of it. And of course that'll be a political thing or a load of crap, but anyway. Life goes on. Earnings season starts next week with the big banks. Usually on the first Friday, right, Madavi? But I could be wrong on the first Friday, but they kick off the earnings. So here we are in Nasdaq, right?
There's one today with Levi's and...
So we're kind of the end of the last. So Levi's reported.
And yesterday we did a thing too. What was yesterday?
Well, yeah, so that's kind of the end of last earnings season.
Yeah, I think there was one yesterday we did. I forgot which one it was.
Who was yesterday? How quickly we forget, right?
I don't remember, If I don't write it down, I forget.
Right, so let's look at where we are. So we looked at, this is weekly S&P. We closed right on, so this is a good short setup, and we'll see tomorrow. So this is why, right? So you close right on the weekly tanking, right? Now, if you go to your daily chart, which is hiding here somewhere, we closed through the tanking, but right at the cage on daily. So you got big resistance. The big thing is, though, you got to be aware, punters and dribblers, is this is a massive ABC. So if it breaks, it's going to be hard and fast. It needs energy. Energy can come from when it breaks these kind of levels. Now, just above it is just a 50, so not a lot of room there. But when you go back to that weekly, where's our weekly? When our weekly, we got nothing to right up here at 4,100. So keep that in mind. 3 waves. And there is a percentage that this is the corrective wave, right? Rather than the whole thing collapsing. That is a percentage. That's why you have a strategy. You know your levels. You know where you're at. Pretty simple. The other thing I wanted to look at real quick was the German DAX. So these guys have a few issues. They've gone into their first trade deficit since like 91 or 93. 2 reasons, but it's all around energy costs. Their energies are going right up, and they use all that for manufacturing. Just really poor policy over the year. I have my theories on that. You can read it on Twitter about Schroeder and Putin and all that nonsense. Anyway, here we are. Look at the DAX is just way down through all this. So this should only get worse, I would think, Madavi, with the problems Germany's going to have, right? And I think Americans, or just non-Europeans, I should say, are misunderstanding how bad the situation is over there with energy. And they can fix it out in the long game. We can surmise all this, that, and the other. The reality is they got themselves in a pickle. They got groomed, whatever you want to call it. And that's where we are right now. So that is the DAX. Look how powerful that move is. It bounced hard off there. If there's some deal done with energy or whatever, then that becomes a more potent thing. That's a weekly chart. You compare that to, I guess we should look at England, because old silly Boris finally fell on his bloody sword. The most unpopular English Prime Minister, I understand. Definitely the worst hairdo of any world leader. I mean, can you think of one of a worst hairdo? Maybe the guy from North Korea. But look, they love that over there in England. This is the FTSE this week. Look at that powerful run. But look where it is as well. Just at the Tenkan and Cajun, right? So all these things are similar. And the 5-minute S&P was pretty straightforward. And this 5-minute, right, which was 8/8, spit of 8/8, Cajun, 3,900. I mean, there's lots of stuff here. Was also that weekly in Tenkan, right? So all this stuff is mathematical. Remember, people are the market's unpredictable. Unpredictable becomes predictable. Anyway, that's our dribble on that. Okay, let's look at commodities. Wheat. Look at that. All these things had a bounce. So there's wheat. Actually, while we're at it, let's look at GME. Madavi wanted to look at here. Because yesterday they announced it. This is why don't ever hang your hat on shit. Don't ever fall in love with shit. GME is the perfect example. So you had all your favourite dribblers buy this yesterday for a 4-1 split. Remember what that really means, right? More stock. But overall, it usually means it's a strong stock. We know it goes up. So anyway, that's up $10 after hours. What they fired their CFO. So we look at a 5-minute chart. Whoopsies. Look what happened right at the close. So everyone's comfortable. They're loading up on calls. The GME. Oh, we love our GME. We love it. Boom. Bang. They dropped the bomb. They fired their CFO. And what did they fire him for, Madavi? Over at GME? GameStop?
What's up?
What did they fire the guy at GameStop for again? We got that chart.
I didn't. I think I'm not sure. I don't want to. Let me read it again. Let me skim it through. Let me make sure what I read was.
Okay, so if you come,
they laid off a bunch of people, and that's the reason it's running up because less employees, going to be better earnings.
Yeah, the initial sell-off was on the CFO, because usually when you fire a CFO in a stock market, you're worried about fraud or something. CFO, because they're going to have to hire someone else. Let me read the. I read it was okay. And then it bounced back from that.
Fired Chief Officer Mike Jones making staff cuts across the department as part of the aggressive turnaround plan of the video retailer. Who joined the company about a year ago was fired because he was not the right cultural fit and was too handsy. Handsy. The person with the matter told CNBC. He was pushed up by the GameStop chairman, Ryan Coleman. So
Ryan Cohen, he's pretty
handsy guy,
Well, yeah, Ryan Cohen, he's a guy I follow a bit. He's the guy, he's got a holding in BBBY, but of course he's famous for Chewy, right? He made all these billions there, and he made an absolute truckload on Apple as well. So he took, for those who don't know, he took his money out of Chewy, put it in Apple. Apple went up like 100-fold, whatever it did. Maybe not 100-fold.
You might have stepped in and like the guy is picnic or something. You never know.
Yeah. Right. So actually, what's interesting, 2 days ago, Cohen did a tweet saying if you are an executive of a company, meaning a chairman or something, and you lead it through the toilet, then there should be something happen about it. These guys that just push these stocks up like with all fake news, basically, and then they sell out of them, right? We all know all that list. We're not going to go. One of them's Madavi's favourite. But a lot of them, when we're bearish, we put them in we got our dirty dozen, right? So I think he's really trying to say, you don't deliver, you're out of here, and you got payment. And he's got to apply that same thing to himself, right?
I can't believe he rallied again today off the. Well, I can see it because of the job cuts, but man, now I'm stuck like Chuck. We gotta figure a way out.
Yeah, you better head off to church, mate.
Yeah, okay. I'll 2 or 3 points in it. Almost what you did last night.
Yeah, you gotta have a stop on them, especially on that little bar.
Yeah. Sometimes, I try to outsmart myself.
Story of my game. I never win when I do that. So let's have a look at some of these other commodities. Corn, when we were on here a couple of days ago, we went through it. It continued lower, and we bounced, as we surmised, right at that window there. Good bounce on corn. These are just correcting. Beans. You can see there's no magic in this. It's going to our levels. And these are weekly charts, right? Top of the cloud on beans. Alcoa, if you recall, we started buying that off 40. That's at 45 today, back to the breakdown level. So that's aluminium or aluminum, whatever you want to call it. I think they're the biggest in the world. It's either them or Alcoa, which is now part of Rio Tinto. So let's look at our main stuff here. Oh, we got a couple of gold dribblers on board, so we should look at gold. So gold, lo and behold, it finally closed not up. See, this was the biggest fall. I forget, it's on our site somewhere, but the biggest fall in a long time. But it held this triple bottom here. So if you want to be bullish, it's holding this 38%, this triple bottom here, right? And that could become a big ABC, which is what the stock market's trying to do. So we'll see. Copper also bounced today. Nice bounce there. When we trade this, we do it through FCX, and we talked about this the other day, that this was big support because of this previous high flat top triangle, and lo and behold, it worked. Boom. Easy stuff.
Today for sure.
And so what happens is, if you're in the right stock that's leveraged, like FCX or Alcoa, they actually move more than the futures, right? So if you're worried about you got to be in copper or the futures and shifting your money around or different hours, anyway. So let's look at them. Sorry, mate.
If people are looking on the short side, these days wouldn't be bad to start a little bit picking away at it.
Yeah. So, well, let's get on to oil. So oil today closed at 102.50. And you might be, what's that number? It actually got to 104. What's that number? That is the Cajun on the weekly. So on the weekly, it didn't actually give you any standout other than this support. So that's why you go weekly, daily. But look at this bounce. This bounce is basically $10, right? More or less. But it stopped the Cajun. And that's what held all these times. It did spit. It really has to get above here on the weekly Cajun to get this going again. Otherwise, this is just some kind of right shoulder in a downward flag. So looking at that, okay? So you go to daily. And look what daily told us. That perfect 38% in the grid. Remember what all this is off. We don't change these. These are long-term charts. Go look at all the other YouTubes. Look at all the other the weekly reports. This stuff doesn't change. There's no dribbler action here. Or Twitter action where you delete the crap. So look what it did. Powerful rally, right? And look what stopped it, Madavi, the tanking. Daily tanking, weekly Cajun. What did we just talk about with that on? S&P, right? Powerful stuff, all this. So it's all tied in. And as you'll see, all this bounced together today. The stocks and the energy futures all bounced together. And look where they all stop. Keep an eye on that tomorrow when the number comes out. So tomorrow we got jobs report, as we said. All the numbers expected on the website. Also look at your previous ones, your weeklies. What do you call them? When they sack people, jobless cuts, and all that's on there, and the hiring and firing, all those indexes. Anyway, daily on, we talked about this on Natty, all this support, right? So remember, you got all your dribblers buying this up here, know-it-alls, all that crap. The people who are actually in the industry that actually use it and know it, there's certain levels based on costs, matrices, seasonal out the curve. And lo and behold, on the front, you can see how there's all that support there. From Murray Math point of view, that is an overshot. Remember, this is different to some people's Murray Math. So you just simply take 8/8, and that's going to bring you right in here. We actually got over. That was a bullish EIA report. That's, again, all on the website. We spoke about earlier. And it got over here. What shocked a lot of people perhaps, they gave up the ghost because of LNG, but for Freeport, remember, there's a lot of other things. We're coming in the summer. We're starting to get hurricanes pop up in the Gulf. All these little things, and there's a lot of, what happens in natural gas is they tend to sell a lot of puts if they're caught long. and sell a lot of calls if they're called short, vice versa, sorry. So this becomes a financial situation where they're chasing their deltas, they call it. So on the weekly, look what it did, spat the 50, powerful. Now, if oil had done a similar thing to this, that would be a lot stronger. So now you know that what this can be. This could be 3 or 5. So if this is a 5, right, 1, 2, 3, bang, into here. 3, same thing, except it means it's going to go a lot lower. What haven't we covered? Did we cover everything? Oh, here we go with the weekly Bitcoin. Good point. So all this stuff here, right, is a 30. You can see we got the grid 0 to 100 to 32. Now, this is the ultimate punning crap ever created. Past stocks. How do I know that? Maths is telling me that. 42 and 30, the top of this energy break, which we got here, right? All based out in, we never changed it, was 423.6%. That's how insane that got. That's why that's a 5 of some degree. Can be completive. But what that means is you're going to get all this energy. And look at this energy building up, again confirming this is accurate, between 38 and 61%, right? So let's look at that on a shorter term basis. So, and the reason I say all that, when I say crap, I just mean the sheep get in these things. It's got a coldish both ways. People love it and they hate it. So when this was all, everyone, this is going to $3,000 or 0, guess what it did? It turned around and bounced. But it's only bounced $2,000. In the bigger scheme of things, that's not big. But look what it did. Spiked exactly to 08, and the tie today was plus 2H. And this has really replicated what we saw in Nasdaq and everything, right? So that's important. Here's Ethereum on a daily. Look what it ran into. The Cajun, right? So all this stuff is maths, and maths is so important because of AI systems run this, different algorithms, different calculations, and people are predictable, right? Lambs to the slaughter, whatever you want to call it. Dress it up how you will. And that's pretty well it there. On the website, let me drag it over for you. I'll find the report. So you need to go to energy. Right, I'll bring it over for you. And you need to be familiarized with all the good stuff on here. Now, these are put out by some of the best minds in the business, do it all for nothing. And their handiwork and everything. So, the big thing you need to look at is today, the most significant thing you want to know about oil and gas is we know gasoline is pumping high. We know the president is doing, some of it's mindless sort of stuff, gasoline, all that. Here's the crazy thing, right? The United States as a nation, it was a history of the U.S. exports of refined petroleum products, which means gasoline and distillates or diesel, hit an all-time high of 6.96 million barrels a day. That's for a country that half the country hates oil and gas, that is your biggest export right now. And from a domestic point of view, yes, we're paying really high in gasoline, so we're basically exporting. That would be a lot lower, obviously, if we didn't export it, right? So we should be significant while that happens. So today's crude number was a massive build of 8,200. I've got all these. And remember, we're not on Twitter all day, we're actually trading, but when I do, but there's other people in the trades community that report to this that are on here that I usually tag in it, and they reply awesome. Like people like Robert Gibbons, Greg over at Commodity Vol, they're fantastic getting back. Brian, all these people, really good people, and you're lucky to have them. Just sharing this wealth of information. That the idea is to help not only the pros, and there's a lot of in those threads, traders or analysts, but those trying to understand. This is a dangerous market if you don't understand it. So that 8.2 that looks bullish on the bearish on the outside. But remember that as 5.8 of that is SPR, right? And Cushing was basically flat. 69 build. And you can see here gasoline stocks drew 2.4. You can go down here. You can see distillates. Right, same sort of situation. And you can see production is pinging still at 20-year high. But anyway, go through here. We don't want to go through it all. You get the gist of what's going on. Natural gas. So natural gas, they're expecting a 80 BCF build. They got a 60. That's 20 BCFs. And you can go through, look at it all, and you can see where it was, right? Where we are at current storage levels. So the LNG is a real factor. As far as Freeport goes, we've got to work out the balance of the whole thing. Okay? And look where it is. Go through there. The other story you need to be aware of, if you aren't already, is what's going on in Europe, right? We spoke about this on Monday, but it's just getting worse. With the Uniper bailout, remember, and there's graphs on here. Look at that 1 year base load. That's even higher. I think that's up another $50 today. I could be wrong, but something in there. And we go through all that economics we talked at the top of the day. Anyway, there you go. Did I stuff that up? I think I might have. I'm good like that. So here's your market wrap. That'll have all that, all the numbers you need to know. I mentioned on bonds, I believe. Did we talk bonds? I think we did. But, you know, as I said, that's negative or inverted. The 2 year, let's look at that real quick. Somewhere down here. Dribble. Where is it? So, 9 basis points at the 2 year to 303, 10 year 10 to 301. All they're talking about is that difference between 2 and 10. Now, these are different days, but historically, that's a depression or a really bad recession, is what that's forewarning. Okay. That's about it from me. Anything else from you, Madavi or Johnny?
No. Johnny, you got any comments you'd like to make?
Watch your levels.
Watch your levels.
Watch your levels. And remember, tomorrow's a big day, right? So, NFP, they are expecting 250 in jobs. Last one was 390.
So what else, Johnny? You got any good work?
Private. Well, I'm just going to the tomorrow's numbers, expecting unemployment to be 3.6 again, average earnings to be 0.3 again. You watch those for stagflation. You also have got tomorrow out wholesale inventories, which I've never really worked out how the market reacts to that. It seems to be random. Wholesale inventories.
Yeah.
So that's usually what's...
I think it's just people want to trade or not.
Yeah, 100%. I think what happens is the market moves and then they come up with a reason why off that number.
Well, all these numbers, the market moves, so it's an excuse, right?
Yeah.
Somebody make an excuse to do something.
And that's what earnings are, right?
We call it the backdrop. The case for it,
Yeah. It gives an excuse, a reason to get out. Remember, all these dribbler stocks that are worthless, make no money, on a highway to hell, going bankrupt, they only move them up so they can get out of it. Revlon was a great example of that. Bankrupt companies, right? So many of them. You see the little ones. Anyway, we have consumer credit out tomorrow. Prior was 38 billion. So what you want to watch on that is how much people are spending on credit cards to pay for their gasoline, higher food, and then it becomes unproductive. As far as, is it the 20% rule for bear market? I don't know what it is to get back in, but we're still down 21% on Russell on the year, Nasdaq on the year 25, S&P 500, 18.2, S&P 400, 18.1, Dow Jones, and these are not from the top. We're down more from that in the top. That's just 2022. Is 13.6 on Dow Jones. Okay, good luck tomorrow. Have fun. Remember, if you like us, share it with other people that you think might be helpful. Subscribe. That really helps the algorithms. The more we get out there, the more we can make this a more, I guess, active YouTube. Spend more time with it. It is a lot of time. So thanks for all those that are listening in and are enjoying it or finding some value on there. Make sure you let us know what's good and bad, what you find useful, right? And what you don't. And you can always comment here live. It'll show up here. Which none of you are right now, I see. What's up with that, mate? And on that note, we will see you next time. Enjoy. Be careful, be cool. If you can't be cool, it's going to get messy.